This is the time of the year when predictions come out for what's going to happen in the markets next year. There's one prediction that makes sense to base your investments on, and that's what we're going to talk about on today's episode of Friends Talk Financial Planning. Hi, I'm John Shear, and I run a fee-only financial planning practice in Middleton, Wisconsin.
I'm Bridget Sullivan-Mermel, and I've got a family financial planning practice in Chicago, Illinois. Before we start getting to predictions, I want to remind people to subscribe. It helps us with our YouTube credibility and helps you get notified when we are putting out new episodes. John, we actually have two things that we're going to say. We're going to say one right at the beginning, and then we're going to listen for later when we have our second prediction or our second action item. Let's talk about your first prediction with the market.
Yeah, this is great. Usually my crystal ball is in the shop a lot. I can't really predict what's going to happen. I got a good prediction, and this is some reliable, this time of the year, you read a lot of things, or at least we get a lot of information, what to project next year and what's going to happen in the markets, these sorts of things. And it's interesting reading, but I'll tell you, I don't put a whole lot of stock other than a cursory, what do the experts think is going to happen? And we see it so often where those things don't come true, right? But so there's one thing that I talk about with clients, with all my clients, I think viewers should follow this too, is that for next year, I think that there's about a 75% chance that on the year that the stock market in general is going to be up, right? So you're investing in your stocks. Like, listen, I expect that there's a 75% chance that a year from now, we're looking at stocks that are higher than they are today.
So is that something that you think, or where are you basing, what are you basing that on?
Yeah, no, that's a great question. So it is something that I think, but it's based on history, based on what goes on. You go back 40, 50, 60 years, and about 3 out of every 4 years, the market ends up positive, right? And so I
think you can probably go back to 1929. And so I think you can go back almost 100 years and see. Yeah,
I bet you that's exactly right. I see some different charts, and things that I can process with that. But it's what has nothing to do with what do I think about the current economy or inflation or the price of oil or any of those other factors, which make a difference, right? Those things do make a difference, but predicting what kind of difference and how the markets are going to react to higher oil prices or lower oil prices, whatever happens, that specifically is so difficult to figure. But when you look back over decades and you say, listen, most of the time that the market goes up, right? Like 3/4 of the time. Yeah, we might have a clunker in there, but to me, it's sort of like being a farmer and planting, beans or corn or whatever you grow. Sometimes we're going to have floods or we're going to have droughts or we're going to, but most of the time if I keep on planting my corn, I'm going to be successful over time. A similar concept for me. And there's some evidence to back it up.
Right. So keep planting the corn, keep planting your crops, keep running the farm, even if it seems like there's some interruption in what's going on. We just keep doing our thing, and 75% of the time we got success, and then 25% of the time, so. But that 75% of the time makes up for the even or down years.
And then some, right? And so that's the thing. And we're not talking about should we be in an energy versus tech or whatever. We're talking just buying, the stocks in general, right? Having money in stocks is a winning plan. And that's going to be the case next year and in future years. And just like it has been in past years, right? So history repeats itself in banking on that factor. So that's one prediction for the year is, listen, I think there's about a 75% chance because that's what's gone on over time, right?
Yeah, and one caution that I would say also is that we're not talking about any individual stock. We're talking about the stock market as a whole. So if you're going to get a total stock market fund or that includes everything, that's when these averages are going to play out. Not if you buy one individual stock. If you buy Tesla or Apple, we don't know what the average, what your ups and downs might be that.
That's right. And I'd go even that. Thanks for making that granular level. I'd even go farther than that, say tech stocks and as a whole, buy all the tech, we don't know what's going to happen with that. When you look at stocks across the board, that's where this really comes in, is going, listen, stocks in general will be up. So nothing specific about that, which is a great investment part, being diversified and having faith that history will repeat itself.
Okay. Now, our
the other thing,
second prediction.
yeah, number two prediction. So the other thing about that, that I think there's a strong likelihood that sometime during the year between January and December, we'll see stocks in general, again, talking about the markets, pull back, I would guess around 15%. I don't know if that means 10% or 20% or 5%, but we're going to see a significant decline next year. Why is that? Why do I make that prediction? Because I get similar to stocks are up 75% of the time. Historically speaking, we see stocks pull back around 15% every year. Some years it's only 5, some years it's 20, right? And when that happens, it's always something different, right? The specifics are different, but yet it's not different in that this is what happens over time, where can you picture what would happen, Bridget, right? So let's say it's in May and, May 15th and the market starts going down, and over 2 weeks, the market's down 12%. What's going to be in the headlines? It's going to be tax rates or inflation or the price of oil, fill in the blank, something that moves this. And it's going to be scary because it always is scary. We look at it, and then at the same, we go like, well, listen, as opposed to, yeah, you know what? Every year the market goes down somewhere around this. This year so far, we've had a 5% drop. I can't remember even when it was. Earlier this year, it went down maybe in the early fall, right? Went down about 5%.
And
So that's just like as usual. What was that?
The last great example is in March, April of 2020, when COVID was just hitting, the market took a dive, and it was
Right.
down 20 or 25%. And there was a clear reason. Who knew what was going to happen? I mean, there's just a lot of uncertainty. I think I've heard it said the market hates uncertainty. And I think that's probably true. And so it's like, okay, this is a new situation. What's going to happen? Nobody really knew, and obviously there's been pandemics before, but not recently. So, or not recently in the US. So, nobody knew. And so that the market doesn't like that. And so it goes down, but then for the year it was up, and this year again, it's been up. So that hits the 75% rule, but not down. This year, it doesn't seem like we did have one of those 15% pullbacks, but we definitely did in 2020.
Right. And so periodically we're going to have these things. And again, the predictions, hey, odds are, and we look at history, this is what happens, right? So we think history does repeat itself. And then what's the actionable item? Well, geez, what do I do with that, you guys? Thanks a lot. You didn't tell me what to invest in for next year, right? I mean, that was, and yeah, but the action, it sounds so silly when you say it, right? Like, oh, geez, it's a 75% chance the market goes up, and expect to see a pullback of, 10, 15%, 20%. Well, what do we do with that? And it's being prepared for that. When the market goes down and it's inflation that scares everybody, you go, yeah, it's scary and we don't know what's going to happen, but take a look at what's going on. Yeah, that's kind of what we expect to happen. It's such a different feeling when you have whatever it is that goes on and you go, holy moly, my portfolio is down 15%. I mean, that's not fun. And then, but if you have the mindset of going and saying, oh yeah, that's kind of as we expected, I don't know, maybe it goes a little worse now, but we thought this was going to happen. Oh, suddenly you can have that longer term time horizon and ride out and be able to deal with it if it's expected. You just said the market hates uncertainty. I would argue that human nature is to avoid uncertainty. Like, geez, I don't like knowing what's going on. If it's something I expect to happen, suddenly I can really deal with that and take that longer term time horizon, and that's a great investment strategy.
Yeah, I agree. So our two predictions are one, market will go up about 75% chance of that. And our other is that it's likely that at some point during the year, the market will go down 15%. So wrapping up, I'm Bridget Sullivan Mermel, and this is John Shear. We're Friends Talk Financial Planning. We are both members of ACP, or the Alliance of Comprehensive Planners, which is a not-for-profit group of planners that think and talk a lot like we do. So if you're interested in what we're saying and you're interested in finding an advisor, either you can call either one of us, but if you live in a different part of the country, besides Madison and Chicago, and you want to find an advisor in your area, you can check out acplanners.org.
That's right. And don't forget to hit that subscribe button. And until next time, Bridget.
Thanks.